Thanks, Dan. Can everybody hear me okay? Strong echo. Is anybody else having that issue? I may have to... Dan, you think it's okay to go, or is everybody having an echo issue?
Sure, I think the sound is good. It's fine on my end. Yeah.
Okay, maybe they need to log out and come back in or something. All right, well, what I'm going to do is get started talking about Fibonacci time and price analysis. Hopefully you all have a little bit of a background on Fibonacci, and I want to go over the 3 types of trade setups that I look for in the markets every single day as far as price analysis is concerned. And then also I believe I have a few examples of some previews of how I use timing, the timing work, just using the same ratios that I use on the price axis of the market, but applying them to the time axis of the market. That would be especially important right now because we actually are moving into a time window for a possible reversal in the stock indexes. Actually, I might just show you my current charts on that when we get to the end of it. So what I want to go over are the 3 trade setups that I look for every single day. They are called Fibonacci price cluster, and a price cluster is the coincidence of at least 3 or more Fibonacci price relationships within a relatively tight range, and it identifies either a key support decision or a key resistance decision. The second type of trade setup I look for is called a symmetry setup. I use this in the direction of the trend. What I do is I basically identify the trend. If we're looking at a bullish trend, what I do is I take the corrective declines within the uptrend and then I project them from any new high, and that actually sets up possible support, and you'll see that it does show up in the market more often than not, and it does hold quite well. It's a very simple technique, but it can be very powerful. The last type of trade setup that I look for is a 2-step pattern. That's a variation of a price cluster trade. So it's essentially the minimum of 3 price relationships that come together within a zigzag pattern. So let's go over some of these charts and examples, and hopefully it'll give you a better idea of what I'm looking to do every single day. Also, if anybody's on Facebook, you don't have to friend me. But you can actually go to my fan page where I post quite a few free charts and videos. So just look under Fibonacci Queen and you'll find me there. As far as the ratios and price relationships that I use, the ratios are 0.382, 50%, 618, 786, 100%, 1.272, and 1.618. Confirming ratios that I use sometimes will be 0.236 and 2.618. With these ratios, I run the 3 different types of price relationships, the first being retracements that most people would generally be familiar with. They're the 382, the 50%, 618, and 786. And I'm going to run the prior highs to lows or lows to highs and look for possible resistance at those ratios. As far as price extensions are essentially retracements beyond 100%. This is also where I'm measuring a prior high to low or low to high and then using the ratios of 1.272 and 1.618 for possible support or resistance. And then the last type of price relationship I use are price projections. This is calculated from 3 points on any chart. It's where I would be projecting a prior high to low swing and projecting from a new high. That would be the 3rd point. Or projecting a prior low to high swing and then projecting from a new low. And for those, I mostly use 100%, and occasionally I will use 1.618. There are people that will use, a few other ratios. They might use the 1.272 or 1.382. But you'll see that when we look at the clustering effect, I typically don't need to use those extra ratios. But running all of the price relationships on any given chart is what gives us the trade setups, the price clusters, the symmetry setups, and the two-step patterns. Okay, just a quick review on what a Fibonacci price retracement would look like. Here we're measuring a prior low to high and running the retracements for potential support, or I'm measuring a prior high to low and using those ratios for potential resistance. As far as price extensions, you'd be running a prior low to high and extending downwards for possible support, 1272 and 1618, or measuring a prior high to low and extending upwards for possible resistance. And then the Fibonacci price projections, you'd be measuring a prior low to high swing and projecting from a new low for possible resistance, or projecting a prior high to low and taking it from a new high for possible support. I mostly use 100%. Occasionally I will use 1.618. Okay, this first example is actually a price cluster in the euro, and it was set up on a 120-minute chart, and it was pretty recent. One thing I didn't mention in the beginning, sorry, is that I'm going to take questions after the presentation. So you know, I'll go back to the questions after, but I just want to keep going and getting through the information first. As far as this particular setup in the euro, all I did here was run the possible retracements. In this case, it was this prior high to low retraced, and also I ran price projections of prior swings. I took this prior low to this high, projected from the new low, and then I took the next low to high swing and also projected that from the low. And this also overlapped a price extension of a prior high to low, extended upwards. The green lines are actually extensions. I color code these for myself so I actually know what is in a price cluster. And then there was also, I believe, a 786 retracement of this prior high to this low. Okay, so that gave us a zone between 143.44 to 72. If you move into one of these zones and the market, holds, doesn't clear it, what you want to do is go to a lower time frame chart and look for a trigger to enter the trade. So in this case, you would have been looking for a sell trigger in the euro when it held this zone. Okay, so in this case, the actual high was made directly within the zone at 143.55, and you saw a 314-point decline from that cluster zone. Okay, this is on a 120-minute chart. I'm going to give you a relatively recent example in Apple. I don't know if you're trading stocks or futures or Forex, but this can be used and applied on anything, but I have been doing a lot of stock work recently. This example shows where we had a cluster setting up in Apple. This is where I took a prior high to low swing. I would typically measure all of these swings, but just, in this case, I'm showing you the ones that created the cluster that I'm using for this example. So that prior high to low projected from the Fed 16th high. There would have been a retracement of this next low to this high. There was a price extension of another swing, low to high extended downwards, and I believe another high extended downwards. That's the coincidence of, it looks like, 5 price relationships that came in between 318.63 to 323.41. That's considered a cluster setup. And hopefully I've got my slides in order, and the next one should show you the result. Yeah. Okay, so this is where we actually, traded down into that zone in Apple. The low was made at 320.16, and we did see a nice rally off of that zone, at least to the 355 area from 320. Okay. A lot of people actually like to use options with this type of strategy if it holds a zone. Actually, if you want to get involved in a swing trade, usually look for a prior swing high to be taken out on a 30-minute chart, and then execute the options strategy. Whether it's just an outright call or a call spread or whatever. And those seem to work pretty well with this work. Okay, let's see what else we've got. Okay, I've got another example of a, let's see, price cluster that includes a symmetry projection. And this was in CMG. What we had here was a prior high to low swing that I projected from the new high on April 20th. I ran a retracement of, let's see, the March 23rd low to the April 20th high. And there was a retracement of 786 that overlapped. And then there was also a price extension of this little swing low to high, okay, that I marked up here, that overlapped this zone. So we had, it looks like the 248.83 to 250.63 area as far as possible support. And that was a 786 retracement, a 1618 extension, and a 100% price projection. And whoops, I must have skipped a chart there. All right, we'll have to go back and find CMG because I'm pretty sure that we had a nice rally up of that area. All right, let's take a look at Koko. Koko on a daily chart. This was actually a relatively recent setup. This is where I had a prior high to low that I retraced, or one high to low, and then another high to low retraced. Those two price relationships were relatively close. I also ran a 100% projection of this prior low to high swing and projected from the low made on June 3rd. And I believe, well, actually, I don't think there are any extensions in here. So we just ended up with a price cluster zone that included a 50% retracement of one swing, a 786 retracement of another swing, a 100% projection of this prior low to high swing to the new low, and what else do we have? A 1272 extension. Let's see. Okay, I'm not actually seeing the line in there, but there was a 1272 extension in there. The price cluster zone came in between the 32.47 to 64 area. That was in the September Koko. And this is actually what we ended up seeing. You had a nice rally directly into the zone. The high was made at 32.48. We initially had a little bit of a rollover, and then we retested the zone, but now it seems to be well on its way back towards a target, which is actually a 1272 extension of this prior low to high swing, and that comes in below the June 3rd lows. Now also, I have to say that there are many zones that will be violated every single day, okay, because I analyze over 100 different charts between the stocks, the ETFs, futures, and so on, and tons of zones are violated every single day. But what you need to do to filter out the trade setups that are probably not going to play out is use triggers, and also some people will use certain types of filters, such as being above or below a moving average, that type of thing. But the trigger to me is the most important because there's really great examples in the last few trading days. Actually, yesterday, no, actually it was the day before, we had quite a few levels that were tested, and we looked for triggers on a 30-minute chart. We looked to see if it was going to shift, and there were absolutely no triggers on the buy side that day, so nothing got triggered. We did start getting some triggers yesterday, I believe, and today. Okay, so that's the Koko. All right, sorry about that little mix-up there. Here is the CMG chart. I just had it out of order after I inserted my Koko example there. So here again, this was you know, a nice cluster, had the minimum of 3 price relationships, and we did start to see a nice rally in CMG. Actually, I think this continued for quite a bit. If you go back to where the May 4th low was made in that stock, I believe that we may have made the target on that one. The target actually for any of these setups is always the 1272 extension of the swing into the cluster zone, or, you know, the setup zone. So in this case, it would have been, you know, taking the prior high to low, April 20th high, to this low made on May 4th, and extending upwards. 30017 was the target. And you also want to, you know, play it defensively on the way up. You do have to watch areas that could terminate the rally and could keep the stock from, you know, getting to the target. And for example, if you got up to this 273, 275 area and you were unable to clear it, you might just want to book your profit right there and not get in or not get back in unless you did actually clear it. Let's see. This next example is a daily chart of coffee. This is where I had a confluence of a 618 retracement of a major swing, this low to this high, that overlapped quite a few price extensions. I measured this low to high, hopefully you can see my mouse okay, and extended downwards. The next low to high extended downwards. The next low to high, which is a little bit more minor, extended it down, and then the last one, low to high, extended it down. That gave us a zone of 254.36 to 257.64. That was in the July coffee this year. And you can see that that one actually, it did hold and made just about the target on the upside. We didn't have a perfect hit. The target was 309.41 area, and 308.90 was the high. Anytime that you get close to a target off of a trade setup, you really want to start trailing up your stops a lot closer to the current market prices at that time, just in case. All right, let's see. We also have an example here on a daily chart in Halliburton that shows you a good example of symmetry. Okay, symmetry, the definition is similarity or equality of swings in the same direction. So here I basically looked within this uptrend, took the prior high to low swings, you know, corrected declines. I would have also taken these over here, but I knew that, you know, they went through them, so they're not shown in this example. But we had 3 swings that it did not go through. I projected those from the April 1st high, and then also ran a retracement low to high. As long as we held above the 42.50 swing low, then that bullish trend was going to remain intact, and the support came in above it at 43.71 to 44.59. There was a 786 retracement that overlapped a 100% projection. Actually, I believe it's 3 times. 3 of those, not 4. And this is what we ended up seeing. You made the low directly within that zone, and this swing ended up becoming very similar to these prior declines. And we didn't quite make the target, which was 52.41, but we did get up to 51.45 from the low made at 44.60. And these are ones that I've been using in my, you know, end-of-day updates. I do the stock report, stock and ETF report, and then I also do a futures report. So these are actual examples of some of the setups that have been in the videos. Okay, let's see, what else do we have? Oh, here is actually an example of at least a minimum type of trigger that you'd want to see. Now, Halliburton, the support came in, you can't see it on this chart, but this is where we were testing that support that I showed you on the daily chart. And you see on the left-hand side of the chart, you've got a bearish pattern of lower lows and lower highs into the price support zone. But as soon as you took out the prior swing high, that was your first indication that that support was worth placing a bet against. So that was your first trigger. and we did end up having a nice rally in that case. Okay, here's one that was set up in Priceline. You can also do this, and you can do it down to a 3-minute chart if you wanted to. I like doing the stock work on weekly, daily, and 30-minute charts or 60-minute charts. Those seem to give you some pretty decent setups. Here with Priceline, all I did here within this downtrend was take prior rally swings and project them from the new low at that time at the 517.58 area. Ran those projections. Actually, you can't see some of the other swings that I used because I would have had to scrunch up the chart a little bit too much. But that also overlapped a 618 retracement of the prior high-to-low swing, that 545.50 high to the 517.58 low. So that was a nice zone. We actually took a put in Priceline, and even though we did come back and retest it, which got a little bit scary, we did not take out the resistance decision, and we did make at least, I believe it was 2 targets on the downside, and yeah, it might have been more. Okay, that's Priceline. This next example actually gives you a little bit of a preview of what I can do with timing work. I use the Dynamic Trader software by Robert Miner, and what I do is run time histograms. It's basically taking the swings that I choose as far as highs to lows, and it's running all the math for the timing between these highs and lows using the same ratios that I used for the price work. Here we had resistance that was showing up within a new downtrend in Google at that time. That came in at the 592, let's see, 57 all the way to the 602.21 area. But what we also saw is from projecting timing from the low made on the 16th, we knew that we also had some time resistance to the rally, because when the program sees a confluence of the timing ratios coming together, it will shoot up one of these bars on the histogram. So this is where time and price came together, and when you have both time and price parameters come together, it's really a higher probability setup, and if it triggers. Okay, you want to make sure that it does trigger. All right, let's see what else I've got here. All right, here's an actual example of what the histogram looks like. It basically takes all the swings that I've labeled, and what you would do is you would look for a standout and confluence of where these cycles are coming together. And in this case, it showed the 2nd through the 4th. This is where you had the highest scores. So that told you that at that time you had time resistance to the rally. Okay, let's see. We've got another example of timing is in the Nasdaq. This is on a daily chart. So, for example, what the program is doing for you automatically is running these cycles. I measured a prior high-to-high swing, and 100% in time forward came in on May 2nd. There was another high-to-low swing, 1618 on time came in on May 3rd. Let's see, we had another high-to-high swing, 100% in time came in. Nope, actually, sorry about that. That's a duplicate. We had a low to high swing projected from a new low on April 18th. That came in on May 4th. And then there was also a low to low swing, 50%. I usually consider that a confirming ratio. So we had May 2nd through the 4th for a possible high and reversal in Nasdaq. You can also express that in the Qs, by buying a Q put, and this is what we ended up seeing. Now, I believe that, I don't think I've given you the updated chart here because we had gone quite a bit lower from that May 2nd high that was made at that confluence of timing relationships. Okay. Actually, I think this was just an example to show you when I used the Nasdaq work, the cycles, because it looked a little bit better on the Nasdaq chart rather than the QQQ chart, but I actually took a short in the Qs. The first indication that the timing might be kicking in was taking out this prior swing low at 58.99, and your choice is either to short it on the break of the low and place the stop above the high, or you wait for the next pullback and then you still place the stop above the high. Typically, if you wait for the pullback, which you'll get 3 out of 4 times, you're gonna have less risk on the trade generally. But the 1 out of 4 times, and it won't pull back for you. And if you really want to be aggressive in that particular or on that particular trade, you probably need to enter just on the break of the prior low. Okay, here's a really good example of when price clusters fail. Epic fail, you can call that. I'm pretty sure this was on earnings. We had a very healthy price cluster zone here, but didn't mean a thing when we gapped below it. So these zones are violated every single day. And also there are cases where you'll see a failure after an entry trigger. But if that occurs and the trade setup is still intact, you can still look for the next trigger. Okay, there was one here this was in silver, where you took out a prior swing high. That was actually a buy trigger, and the stop would have been placed underneath this low. Okay, well, that would have been stopped out. And then there was a secondary trigger that I believe did play out, and that was when it took out this next prior swing high at 35.60. Okay, one more example, again, to keep it honest here, is this is where a cluster was tested on a 5-minute chart in the British pound. We initially saw a rally, but then blew through both of the zones here. Okay, what you typically want to do, because on a retest of these zones, the odds are much lower that they're going to hold. On the first test, the odds are higher. Okay, on a retest, it doesn't hold as much. Here, when you do start to get a move off of a zone, is at least try and get a stop to break even as soon as possible. Okay, this is one other example. This is an example of symmetry. This was a really beautiful symmetry setup that occurred in the corn, and it was so simple to set up because all it was taking this prior major high to low swing and then projecting from the new high on April 11th. That gave us 659 as a projection and possible support. You can see that both of these swings were exactly the same. So symmetry is equality or similarity. Here it was exactly equal, 129 and change and 129 and change. We ended up not reaching the target, but we did have a huge rally in the corn off of that simple symmetry projection. Actually, I'd have to go back to my chart. I believe that we at least got up to this 761 area off of this low. So it was at least a buck. All right, let's see what else. This is an example of timing cycles again. This is in Lulu. This is where we had a prior high-to-high swing, 618 in time, low-to-low swing, 1618 in time. See, another low-to-high swing, 100% in time, and then I also measured a high to a low projected from the Feb 11th high, and that also came in on March 1st. So you had a clustering of time cycles, which is what you want to see when you're going to look for a possible change in trend. That came in between March 1st and March 3rd. We made the actual low on March 2nd, and then just took off from there in Lulu. So when you have timing that also overlaps price support, that's a really good trade setup. I realize that it's a lot of work to do, but it's worth it if the trade's going to make you money. Okay, this next example is just showing you how the histogram would have also calculated this clustering of timing and put it right underneath the chart in the histogram that represents this grouping of time cycles here. Okay, Google, this is an example of timing in Google. It's where I took a prior high-to-high swing. We had one cycle come in on March 31st. Let's see, then I measured the next high-to-low swing. I had another cycle that came in on the 31st. I did an alternate time projection where I measured the December 31st low to the Jan 19th high and then projected it 100% from the March 16th low. That gave us April 1st as a date, and also measured a prior low-to-low swing. We got a confirming cycle there, 382, that came in on April 1st. So here was a cluster of 4 time cycles between March 31st through April 1st for a possible high. And I'm pretty sure this is the same time where we had that resistance on this chart. And it rolled over nicely, made the high on April 1st. Anytime you move into a cluster of time cycles, if you're moving straight up into it, you're going to look for a reversal to back down. If you're going straight down into it, you're going to look for a reversal to back up. Okay, actually that is my last slide. I think that I can show you, let's see, a grouping of time cycles that we're seeing right now in the S&P cash. Can you guys see this screen here? So what I've done is just pull over my other chart. Okay, well, I'm going to assume that you can, otherwise somebody's going to stop me. But basically, we're in a time window right now for a tradable low, and if that window is surpassed, the next grouping of cycles comes in. Let's see, if you look at the histogram, this is more like the 18th through the 22nd. This is done, the histogram is done via calendar day projections, and then I've also done the time cycles that are underneath that using trading day projections. So when you switch it back to trading days, it will show you some of the other price relationships that are due later this month. There will be some differences between the calendar day projections and the trading day projections. All right, let's see, what else did I have here? I did have a really nice setup in, well, I'll actually just show you a couple in, you know, the other stocks. If anybody day trades, this, for example, is a 30-minute chart in Mosaic, and we have possible support 58.75 to 59.20, or 57.95 to 58.10. So these are two separate setups. If we end up holding, because I know this market's really skittish and we could just blow through this support, but if it does by chance hold, you'd want to go to something like a 3-minute chart, a 5-minute chart to trigger an entry. Some people will even use tick charts. And one of the other markets, well, actually I erased that setup there. Okay, let me find one other chart I like a whole lot is CMG. That's right on top of support, so you'd want to look for buy triggers in that one. We did take out a prior swing high. If this is any good, then we ideally want to see it hold either above 296.10 to 298.60 or 292.54 to 293.20. And that's those are just a couple of examples of what I'm looking at currently. And I think, I'm not sure how long I've been going here, but I think I'm ready to start taking some questions. All right, I see that there were quite a few or a few questions at least. So I'm going to go back and see if I can grab those. Okay, sound test worked. Sound is worked. Maybe there was a question in there. One question is, would I show the analysis for oil, S&P, and gold? One of the things, if you're interested in what I'm currently looking at, you can end up doing a 2-week trial if you're interested. But I will look at a couple of those if I can grab them. The one interesting thing in gold is that seems pretty much like it's developing a bubble to me. I've got, let me get my ETF update here. Okay, this is actually USO, not the oil, but the oil pretty much sets up the same way. On the daily chart, I'm definitely setting up the sell side with the bounce that we might see from this low. Just know that 2 extensions on the downside, that this is in the position for a corrective rally. But that's obviously would be a counter trend trade, at least counter to the daily trend if you looked at the buy side in this one. What I'd be setting up is the sell side. I've got a couple of resistance decisions for a new short in USO. GLD, what was real interesting about this one is the timing. We've got a prior rally swing that was 26 trading days, another one that was 33, another one that was 33, and we are currently 27 trading days up from this last low. So we're actually coming into some time resistance. I would not be surprised if this bubble at least popped for a little bit. I'm telling people to either place stops in at least GLD right underneath this prior swing low on a 30-minute chart, or underneath this one at 167.49. And let's see, as far as the indexes, even though we do have timing for a possible intermediate low, because of the shift in pattern, once we took out this prior swing low that was made at 129.63, and this is the spider rather than the S&P, I'm setting up symmetry for possible shorts. So in the spider, it comes in anywhere from this 117.94 to 119.78. That would be the first area, and we're holding below that, so this market is definitely still vulnerable. We just have to see if it starts to shift on a lower time frame chart to give us at least a corrective rally that we can then look to short when it gets up to the key resistance decisions. How do I determine whether the trend is bullish? I look at the pattern, the general pattern. If you look at the side of this chart in the spider, the general pattern is higher highs and higher lows. Okay? But once it shifts, okay, well, we ended up taking out a prior swing low over here. We also ended up taking out a prior swing low here. When you start to see a bearish pattern of lower lows and lower highs, you definitely want to set up the sell side instead. Let's see. Which time frame would give the best results? It all depends. It works in all time frames. I mean, it just depends. If you really want to tighten up your risk, then maybe you want to do trade setups on a 60-minute chart and fine-tune it with a 5-minute trigger entry, and then your risk would be defined just above the zone or the high that's made, the higher low that's made before the trade is triggered. So that's something you can look at. It does. I really do like the daily charts. I like to take the daily chart and then go down to a 60 or 30-minute chart, and then also an even lower time frame chart to fine-tune an entry. Can I explain the mechanism? Okay, training. I did write a book called Fibonacci Trading, and I did have to make it very clear because there, are definitely a lot of beginners that want to learn this stuff, and it's just called Fibonacci Trading, and it is there's a link on my site, Fibonacci Queen, for it. At Amazon is probably the best price for it. That's one way. Let's see. I also have done some, videotapes. Actually, they're doing. I work with Trade the Markets on some of the website stuff and the marketing, and they actually set up a package, if you're interested in, that has the video, and it's actually, let's see, I think they changed the price on it, so I'll give you that link in a minute. But I want to see what the other question is. Okay. All right, let me give you this link, but then I'm also going to give you an example. I'm not sure if this worked. Oh, no. Let me put this in the chat area. Okay, there's the link for that. But let's take a look at, actually I'll give you an example of how I set up the SLV yesterday. Basically, I'm using a retracement tool on this program, but it also does the calculations for the extensions because they're essentially retracements beyond 100%. So I'll use that tool to run retracements and extensions, and I will use this tool to run projections, mostly 100%, sometimes 1618. So here I measured the prior low to high swings for the retracements. Okay, that was, I had done that on the close yesterday. And I also took the projection tool. I measured the prior highs to lows, projected from the new high. The next high low, projected from the new high. And then also, there were two extensions. It had one low to the high, extended, and that's where 1618 overlapped, and then another low to high, extended. So this basically gave us a cluster between 35.26 to 36.15 in SLV, and it did trigger the buy side today. If it continues to hold above that low, it then targets 42.59, and the only hurdle on the way up that I'm concerned about is this 39.20 to 22 area. Okay, so that was a setup that came in yesterday. It triggered this morning on the buy side, targets 42.59, and interim hurdle comes in at that 39.20 to 22 area. So this work basically defines your risk. It gives you a target, and you know when you're wrong, because if it blows through the zone, you're wrong. You get out of the trade. Now let me see if I have any other questions. Okay, how do I determine the stop distance? Is it the initial? The initial stop will always be placed either, like in this case, it could be placed below 35.26, which is the low end of the cluster zone. But what I typically like to do is I will either place it right underneath the low that is made into the cluster zone, and depending on what I'm doing, whether I'm doing an option spread or something outright, I may give it a little bit more room. But generally, if it takes out the low that was made before the trigger, I would take myself out of the trade. So that's where the initial stop goes. And then as far as the trailing stop, it will I will typically look at prior swing lows, you know, to trail it up, and I would choose the time frame according to, you know, how much I'm not willing to give back. All right, let's see. Okay, I draw all my extensions and projections on the same chart to get the clusters. Yeah, I do it on the same. I do it on the same chart. But there are times where you'll have something that shows up on a daily chart and it might overlap, you know, something on the 60. But I do all the work on one chart. So basically, when I do my updates, I've got you know, a number of different markets. Some are setting up, some aren't, and we just go over the levels that you can look at for, you know, a possible trade entry. The formula to make money with this methodology is trade plus trigger equals entry, and then you manage it. And trade without a trigger equals no entry. You stand aside for the next setup. Okay, unclear on how to calculate time cycles. What I'm basically doing is I'm measuring a, like, let's say, I just click on the time cycle tool that I have here. You know, I have all these ratios that I like to use. And I would click on a low to a high, and it's going to calculate the ratios of that low to high in time and project them out forward. And you would do all possible ratios, you know, when you use this. Beyond that, you know, it's definitely all in the book. There's also, if anybody ends up doing a trial, there are quite a few member videos, and there is a video on the timing work in there. Okay, are the tools available in Thinkorswim? The price tools are, for sure. I think that one of the timing tools is, which would be the single low to low or high to high cycles. That is probably in there. But I don't think that there's alternate time cycles that I use where you can project from 3 points, you know, so taking like a low to a high and then projecting forward in time. I don't believe that it has that, but it's something you can ask for. But you can at least do the price work in Thinkorswim. I know that much. Okay, I'm not sure I understand. Combined with a harmonic pattern completion for target. My targets are always the 1272 is target 1 of the swing into the zone. 1618 is target 2, 2618 is target 3. And if you were doing a counter trend trade, you actually might look at the retracements, you know, as a target. I tend to stay away from counter trend trades. I don't have Forex data anymore. I have enough going on between my stocks, ETFs, and futures. I just don't do Forex anymore. Okay, what are my favorite ratios for retracements and extensions? If I had to use only one, I would probably use 618. I mean, that's the golden ratio. All the other ratios and you know, are really developed from that basic one. And I do have a whole page in the book on where the other ratios came from. Do I have any other questions? It doesn't look like it, so I actually have to, I finished my stock update, but I still need to do my futures update, so I think I'm going to get going, but I will give you my website if you want to check it out. And there are also other presentations that I've done on some of the other websites, you can look it up. They have archives that you can watch if you have any interest in this. But if you seriously are interested in it, you can look at the work, but also the book pretty much has everything that I do in it. And we broke it up into quite a few chapters because there's a lot of information there. All right, Dan, I'm done. If anybody has any questions, you can also check out my well, this is the website, but then let's see if I can get the Queen.
Well, thanks very much for coming, Carolyn. We appreciate it.
On Facebook, this is where I post some of the charts and the free videos.
Right, and you're going to be at the Traders Expo in Vegas too. If anyone's going to be out there, I'd recommend stopping by and saying hi to Carolyn. Yeah,
well, I'll be actually both, the one in September and the one in November.
Excellent.
I might as well. I live here.
Right. Well, thanks so much for coming, Carolyn. We really appreciate it, and hope to catch up soon. And thank you, everyone, for attending. Any questions? Do shoot us an email.
All right. Thanks, Dan. I'll see you later.
Good night.